Good evening. This is Doc Severson for the TheoTrade report for Thursday, October 12th. I'm starting out today's video with looking at the Dow Jones Industrial Average. We don't necessarily look at this one all that often, but we do have a very important signal showing right now. We have, as you guys know, I've been talking about this monthly exhaustion level. Now this study is showing what we call fractal energy, which is really based off of the choppiness index that shows the linearity of this price move here of the last 14 candles. And now we're starting to see not only the monthly chart into severe exhaustion. We do not have charts that continue trending when they go at levels of 25 or lower than that. We just don't see it. And then we not only have that, but we also have the weekly chart, which has gone parabolic and now is also gone into exhaustion here technically. And then of course we have the daily chart, which has rallied very strongly from 22,000 and now is just a sneeze away from touching 23,000. When that happens, you know CNBC is going to be ready with their party hats and their kazoos. But the thing here too is that it's also showing that extreme level that's around 25, where we just do not see markets continue trending for very long at that level. So not only do we have daily, weekly, but monthly exhaustion showing up here, and that is a triple signal that we rarely ever see. So the last time that we did see this signal, we saw approximately, about 6 weeks of consolidation in this area. So at least we did get a reaction from it, that at least it didn't continue just running up against the rules of gravity. But again, range expansion like this leads to range contraction. So this is now starting to rise up as a very real possibility in the near future that we have some consolidation at the very least showing up. Not necessarily calling for a crash. It's not really ready for that right now. We'll know when it's ready for a crash. But I want to look now at the component levels of the Dow 30. Now, the only order I'm going to go through this watch list here is based on today's gains. And so this is going to be a little bit of out of order in terms of alphabetical or over the recent time. And what I'm looking for is not necessarily ones that are going screaming to the upside. I'll talk about those in just a minute. But I'm looking for ones that money could rotate back into at this point. So we'll start out with Caterpillar. Now, Caterpillar is obviously playing the infrastructure play here and has been going nuts. And it's coming up on earnings, and obviously this thing, let's see, 10/24 earnings. So in a couple weeks from now, we'll see earnings from Caterpillar. That has definitely caused some gapped behavior recently. Most of these have been gaps to the upside after earnings. So Caterpillar's working strong. 3M, also. United Technologies, a little bit of a consolidation pattern here. So United Technologies has some potential to escape this consolidation pattern. McDonald's is screaming to the upside. Who knew Happy Meals would be so profitable? Microsoft is unstoppable after the huge cup with handle pattern that we've seen here. PG still remains in an uptrend. Boeing is just a poster child for just parabolic right now. Nothing like it. Walmart recently is extraordinarily strong with the stock buyback program. Travelers, uptrend. Johnson & Johnson, strong uptrend. Merck is interesting because Merck's in a consolidation. So again, we want to keep an eye on the ones that are in consolidation or actually in a downtrend right now, because there may be some potential while we go into consolidation for money to rotate into these. Now we get to Coke. Again, Coke's still in an uptrend, kind of a consolidation up near the highs. And now we get into some of the examples of ones that have not done so well. So GE's really kind of suffering right now and is down to $23 per share. Wonder if some point by the end of the year, GE actually ends up not being on the down. We'll see. Here's Pfizer. Again, Pfizer's in the consolidation. This is ripe for a breakout from that consolidation as well, too. Intel breaking out from a consolidation again recently. Intel has not been a strong performer for a number of years, but range contraction like this typically can lead to range expansion. Now we get into some of the energy stocks like ExxonMobil, perhaps breaking out from a long time bear market, really since 2014. ExxonMobil's been in a very corrective pattern. So could this break out to the upside? Again, this is one of the candidates for that. Same thing with Chevron. Chevron is definitely working now into a primary uptrend from one of these energy stocks. Here comes Nike. Now, Nike's been beat up over the last couple of years. Again, a candidate for something which might be picked up as being a little too beat up. Now we get into Dow DuPont. Dow DuPont's in a very strong uptrend. Here's Visa, completely parabolic. I'm going to talk about these parabolic stocks here in just a second and show you what to look for if you're looking to take a bearish position on those. Now we get to Cisco. Cisco's still kind of a chunky, it's definitely in an uptrend, but hard to get excited about this one. American Express, extremely strong uptrend, has gone parabolic recently. Verizon, not so good. Very choppy trend, has been setting up with a base right now. This one could, again, attract attention from this. Apple, we all know about Apple, been parabolic for a while. IBM has been in a primary downtrend, again, but this is one that could actually reverse from that downtrend. First of all, by probably printing a higher low and then breaking out this trend line here and setting up a higher high. That could start the reversal process here. Watch IBM. Don't discount them just yet. Home Depot, totally parabolic. JP Morgan had kind of a tough day after earnings, but has been very strong lately. Now we're getting down to the final few here. Here's Disney. Disney's been in a huge consolidation pattern now for a number of years after going completely parabolic before that. So Disney does have the potential, if it's able to break this downtrending pattern to the upside by printing a higher low and then a higher high above 101, would do that as well too. Last couple here, United Health, completely parabolic. And now finally, Goldman Sachs has been very strong, as has been most financials for the past several months. Okay, so what do we do with all that? All right, first of all, let's talk about the stocks that are completely parabolic and what you can do with something like that. Now, looking at Caterpillar is a great example of something like this, something that came from a great long base and has broken to the upside. In fact, looked like it was breaking to the downside from this and then did a stop and reverse, and it's just gone ballistic, going from 60, more than doubling in price now, up to 130. So what can you do with this one being also in triple exhaustion, monthly, weekly, daily? What do you do with something like this? Just short the highs? No, don't do that. Okay, what you do with something like that is look for the reversal patterns. Now, reversal patterns don't come from the monthly chart. Monthly chart sets the major trend, as does the weekly chart. These are two of the parent time frames. Reversals start from the inside out. So what you would see is this would start from a very innocuous looking pullback at this point, which would bounce up to another higher low, and everybody would say, oh, there's the dip to buy in Caterpillar. Well, eventually when this does reverse, what's going to happen is this high here is going to turn into a lower high, and it's going to catch a lot of people off guard because that is the entry, that is the very beginning or the genesis of the reversal for this. Now, ultimately, this reversal, if it's going to go anywhere, will then propagate over to the next time frame here at the weekly chart. So this downtrend on the daily chart is just going to look like a standard stock pullback on the weekly chart. You know, something much like this one was right here. It looks like a standard pullback. That too eventually should bounce back up again. Everybody should wipe their brow in relief and say, well, okay, Caterpillar is trending up again. But just like what we had back here in 2014, that sets a lower high, and then the damage really begins because once again, you've got too many people on the wrong side of the boat, leading in the wrong direction, and then the wind shifts and they all have to cover. And so that's what would cause up here. So if you want the very first hook onto any potential downtrend on one of these Dow stocks that are just going ballistic, look for the lower high to set up on the daily chart first. That will not necessarily be the ultimate high from this because you'll see a move back down and a pretty strong move back up on the weekly chart to set the hook with the lower high as well too. But this is the very first signal that you might get. It may be tradable to the downside. It may be worth a little bit. But ultimately, it's not going to create one of these moves. We're not going to just see this thing completely drop like a stone like this. It is a propagation. It works in phases. It first starts at the small daily chart and then works its way up to the weekly chart. And then ultimately, if something is really, really wrong, a lower high sets up on the monthly chart. And then that's where the real carnage occurs, because that normally leads to a full bear market in whatever asset that you're looking at. Now let's take the opposite side of the equation. And the reason we're doing this, right, is because we looked at the Dow, and we said from an energy perspective, I would expect to see a very strong probability of this thing setting up in a consolidation zone. And what we're going to have in this consolidation zone is we're going to have money swapping from one asset to another asset. So people are going to take profits on the Caterpillars, on the Boeings, on all these stocks that have just gone completely ballistic, like Visa, things like that. And they're going to look for the more beat up assets that are going to be considered a safe harbor and say, okay, how can we get money working into these since they're beat up and cheap right now? So you can take something like Disney, and what you're looking for in Disney on this is this pattern. Again, this is the opposite of what we looked at with the strong stocks, is that we want to look for something where this sets the hook with a higher low and then breaks through that trend line as a higher high. That's the very beginning of the reversal. Again, this uptrend now would just look like a simple swing up on Disney, and that doesn't by itself set the reversal. What has to happen also is a higher low has to set up on the weekly chart, and then this whole pattern gets reversed to the upside. That's how a reversal gets started in a depressed asset. So again, the net here is to watch for the high flyers to have profits taken. If you want to take some kind of a short delta position on those, watch for the lower high to set up. It'll take a few days to set up with a higher low and then ultimately a lower high, and then that sets the hook. By the same token, conversely, we have the depressed assets, which may offer a long opportunity. So we'll see that rotation happening when the consolidation does occur. That is it for today's report. Thanks for listening. We'll see you this weekend.